Welcome to the Wealth Studying Podcast. This is episode 476. Today is June 29th, 2025. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. What I want to cover in today's episode is a company that you've never heard of. It's a company that you should have heard of, though, because it has exactly the right type of characteristics to take advantage of what I see as all the current and future trends that I call the industrial tech era. Okay, before I get into all that, just quickly want to mention, in terms of the overall stock market, it is at another amazing record high. This has taken a lot of the negative Nellies by surprise. You have to remember that in the summer months, there does tend to be less liquidity, and so moves can be more dramatic. That includes moves to the upside, and could be likely that in the coming weeks, we'll see a sharp move to the downside. That wouldn't worry me. In fact, I have a nice little cash reserve that I'd love to buy the dip into, and if I do, I'm going to try and focus on stocks that take advantage of the industrial tech era. And to give you an idea of what to look for, I'm talking about a stock like Jabil. Again, Jabil Inc. is something you've probably never heard of. While they are a smaller company, they actually are a component of the S&P 500. They had been best known for being a major supplier to Apple. That hasn't been such an advantage to them, and they've been successfully going through the process of diversifying and not having to rely so much on just one big customer. In fact, that's one of the attributes that I love about this company, because they're a supplier across the board to both small and mega companies that are involved not only in little devices, but even in large data centers, crucial areas of infrastructure, and across broad manufacturing and industrial sectors. What they specifically do is design and manufacture printed circuit boards and just general electrical circuitry. And again, what I really love about this company is they not only design it, they manufacture it. And that's been the problem with a lot of U.S.-based companies, which they are, is that they design that stuff in the U.S., but they don't make it here. I mean, look at a company like Nike. They design athletic footwear, but they really don't own any factories, right? They farm all that out. Well, that's not the case with Jabil. They not only design circuitry, but they also manufacture it, and it's even better than that because they have a large manufacturing footprint right here in the United States. And again, while it's a company you've never heard of, their components and circuits are integral in everything from automobiles, both internal combustion to EV, to robotics, data processing, medical and pharmaceutical devices. I mean, they literally have circuits that are in, a small pharmaceutical injectable type products like the weight loss drug, the GLP-1s. They may have a circuit involved in something like that, which obviously has to be incredibly precise and regulated. So they have that level of quality. And they also may be just a simple circuit that's at a credit card reader at Walmart and everything in between. They literally build key circuitries for the automation that's powering these big U.S. factories that are being built. So they're in the robots, they're on the manufacturing and processing line. They are big. In fact, their biggest sector right now is data processing. So from general cloud computing to the big mega scale artificial intelligent data centers. And within that complex, they're not only in the minute circuitry, but the integration of the racks, the advanced networking gear, and even in the power and cooling systems. And it's not just simple semiconductor circuitry. With recent acquisitions, they're even covering areas of photonics, everything from simple things like solar panels to very complex laser control and data transfer and fiber optics. So they've got all the bases covered. They've reduced that, major dependency they had on Apple, which at one time accounted for, I think, close to 70 or more percent of their sales. That's down now below 20%. And they're, literally expanding that to small little mom and pop operations that need the circuitry, all the way up to the big giants, the Amazons, the Googles, the Microsofts. And as I mentioned, they're even in the pharmaceutical side of things, so J&J and other pharmaceutical companies are reliant on their technology. And with that large and expanding U.S. manufacturing base that they're building, they're attracting more U.S.-based manufacturers, and it's showing up in their overall performance. When they recently announced their Q3 fiscal earnings for 2025, they blew the numbers through the roof. And take a look at their stock chart. They've skyrocketed to an all-time mega high, and I'm not telling you to run out and buy the stock now. I bought it last May. You can check my blog and notification section of investablewealth.com. I think the date was May 13th, 2024, so it's out there in the archive. I've owned it for over a year now. I've sat through the pullbacks with it, and I kind of want to emphasize this. It's at an all-time record high. It could easily drop down from that. I would probably see that as an opportunity to buy more. In fact, that's how I got into it last May. It had put in a record high around April, and it was a typical, dreaded head and shoulders pattern. I waited till it dropped down and tried to buy in where I thought it was at support at around a 2-year moving average. Well, I was wrong. You know what? That support fell apart. It dropped another, 10% or more from where I bought it at. That put it in a confirmed bear market, down probably more than 35% from its record high. But I didn't panic, right? I looked at the good things from their financial stability, their profitability, their manageable debt, their increasing sales, and their acquisitions that are moving them into owning the right technologies, and those technologies being based in the U.S. So just because it fell apart in the price, I didn't worry about the day-to-day fluctuations. And it did recover, but you know what? Then it fell apart during the tariff fiasco in April. Dropped back down almost to as low as it had been at its previous 52-week low. And you know what? I picked up some of that on the side as well. I looked at that as a buying opportunity. And it's paid off. From that 52-week low, they're up an incredible 126%. They're up over 50% just year to date. And while they could, totally pull back because maybe they are overbought at this point, I want to hold on to them for the long term because they are the quintessential industrial tech era type stock that's taking advantage of all the right trends, including building that USA-based manufacturing base. Well, hey, am I right or wrong? I don't know, but I'm holding on to Jabil. Come on back for future episodes and we'll find out how it does. Until then, as always, this is John Pugliano wishing you the very best returns.